A provocative new op-ed from BlackRock's former CIO of sustainable investing claims, quote, the financial services industry is duping the American public with its pro-environment sustainable investing practices. In the piece, Tarek Fancy calls out Wall Street for greenwashing the public and making sustainable investing, quote, merely PR. He joins us now to discuss. Tarek, thank you for joining us. You were at BlackRock, which is front and center in promoting socially and environmentally friendly practices for investing. Why are you calling out the industry?
Well, I think that having had the experience of being there, I can say quite confidently that ESG is not as good for investing processes as people claim. And that's very important because it effectively is a financial jargon sort of proxy way of saying, does it pay to be responsible? The reality is it doesn't pay that much to be responsible. It works in a few instances, in a few strategies. It's being blown out of proportion, and none of it has any real social impact. And it got worrying to me enough that after I left for personal reasons, and I started to wonder if this was, at first I thought this is kind of like giving wheatgrass to a cancer patient, right? The world is suffering from the growth of climate change and other ills. And, wheatgrass is a nicely marketed idea, but there's no reason to believe that it'll help stop the cancer. But at least it might, make people feel a bit better or whatever. And after I left, I started to wonder that the messaging was so aspirational and just out of touch with what I'd seen about the reality of that thesis that I started to wonder, is it actually works? Is it wheatgrass that's convincing a cancer patient to actually delay chemotherapy? So I talked to the president of a university I know in Canada, and we teamed up and did a study. And it showed definitively that the more you give people messages around a whole bunch of ideas around social purpose and business will do the right thing all by itself, all voluntarily, all stakeholder capitalism, the more you mislead the public into believing that free markets will correct themselves and that we don't need government regulation. And that comes directly at the expense of the youngest and the poorest in society.
So, I just want to stop you because we did reach out to BlackRock on this, got a very long statement from them, but what BlackRock says is that they believe greenwashing is a risk to investors and detrimental to the asset management industry's credibility, which is why we strongly support regulatory initiatives to set consistent standards and increase transparency for sustainable portfolios. So it sounds like a little bit what you're saying. They also go on to say that they have launched some ETFs that do remove all fossil fuels, which is one example you called out, that some of these funds do still invest in oil companies or other non-sustainable businesses. So what specifics are you pointing to here?
Well, so let me say two things. First of all, BlackRock is not the worst offender in the industry. I would actually tell you that probably we're better than average. The issue is that the entire system doesn't work. And where BlackRock is culpable is that it's promoting a thesis that tells people that these products, whether done correctly or incorrectly, whether they're sloppily made and they include a name that they shouldn't, or the opposite, they're telling people that these things have social impact. And I can't stress enough, there is no evidence that any ESG ETF has any positive social impact that I've seen. There's no evidence that by buying a low carbon ETF, you are actually going to lower emissions. There is evidence that fixing the rules of society through government regulation actually can do that. We're doing it through Wall Street makes no sense. They're capital allocators and they're going to chase yield and profitability. And if you put a carbon tax on, every portfolio manager at BlackRock and elsewhere will adjust their portfolio to change the changed reality. If you go and you tell them that, fighting climate change makes money and that this is great for the world and, you should lower your carbon footprint because it's good for the world, the vast majority of those strategies don't do it because they're too short term, they're structured in ways that those risks don't matter. And in general, it matters very little and it creates little social impact. But what it is doing is creating a giant societal placebo that's lowering the chances that we're actually going to have any kind of regulatory reform. And I think that that's irresponsible. We're 13 years after the financial crisis. We're decades after we've known that climate change is the greatest market failure in history. And right now, business leaders are peddling a silly markets correct themselves idea. And that I have a problem with. I think BlackRock is doing an okay job. But when Larry says in January that I prefer the capitalists self-regulate, I think he's doing a massive disservice to society, and that the people who are going to be left holding the bag as we delay are going to be the youngest and poorest.
Shepard Smith here. Thanks for watching CNBC on YouTube.